Well, hello everyone, and welcome to TradeStation for today's webinar session, another in our series of webinars that will introduce you to professional traders and educators who will offer their distinctive insights and methodologies on a wide variety of markets and trading topics. Today we're going to talk about what works today in algorithmic trading with Kevin Davey, the founder of KJ Systems, KJ Trading Systems. Our presentation today is for educational purposes only. All the symbols and all the trading ideas that we discuss here are for demonstration purposes. They are not recommendations. Our presentation is not an offer or a solicitation of any kind in any jurisdiction where a TradeStation affiliate is not authorized to do business. Active trading is not suitable for everyone, and options trading carries a high degree of risk and may not be suitable for all traders. Please read the disclosure information, the disclaimers that I've placed in those PDF handouts in the chat panel that will describe some of the things you need to be concerned about in the way of risk and the characteristics of risk for trading from trading instruments. You can also view all those documents on the TradeStation website. My name is Don Prattle. I'm the Director of Trader Development here at TradeStation, and I want to turn things over to Kevin Davey right now so that we can talk about the state of algorithmic trading in 2017. Kevin, welcome to TradeStation.
All right, thanks, Don, and welcome everyone. And thanks for taking time out of your day or evening. I know some of you overseas, and today I'm going to talk about algorithmic trading, for the retail trader in 2017. With that, let's get started. First, of course, I'd like to thank TradeStation. It's always an honor to come on here. I don't know how many years I watched webinars from TradeStation with some of the industry experts and people I really looked up to, trading legends and that kind of thing. And I always thought, wow, that would be kind of cool if I ever got to do one. And so it's pretty neat for me. This is my second one, and I really enjoyed the last time, and I'm sure I'll enjoy this one. And the big reason I do it is because I use TradeStation. As they say at the bottom, it's my weapon of choice in today's market. So people are always asking, hey, how come you don't use this software or that software? And my answer always is, I've been using TradeStation for over 10 years now, and I know it pretty well, and I know what works with it, and it's great. And so I do most of my trading through them. All right. So today I'm going to briefly, for those of you who don't know who I am, I'm going to give you a brief introduction to me. Then we're going to talk about algorithmic trading and how they can be made to work today. Then we'll have time for questions and answers, and then at the very end, the last couple minutes, I'll do an autographed book giveaway. I have a couple questions, and I'll give away a couple copies of my book, and we'll get to that right at the very end. So first, I probably will be showing some hypothetical results and equity curves and that kind of thing. So I put up this U.S. government disclaimer. And what I always tell people, if you've never read it, there's a lot of disclaimers and, all these fine print type things. And most people never read it. But I'll tell you what, these two paragraphs here are really required reading for anybody wanting to trade. A lot of good information. And if you took it to heart, you'd save yourself probably a lot of money. I know there's a lot of things that are mistakes that I've made along the way where I didn't treat results as hypothetical, and I suffered because of it. So keep that in mind. Past performance is not indicative of future results. That's a key phrase. Okay, so who am I? First off, I am a full-time trader, and I trade just futures. I don't actively trade stocks at all. I'm just a futures trader, and I just trade my own money, and I think that's important. I'm not somebody who talks the talk but doesn't walk the walk. I do both. So I trade full-time. That's my primary thing. But then I also do some teaching and some writing and some consulting, as my trading day goes on and I have some downtime. I've been trading for 25 years, and the last, I think, 8 or 9 has been full-time. So before that, I was a part-time trader, always aspiring to be this full-time trader, and then I was able to make that leap, which a lot of people want to do. And 3 years straight, I finished in first or second place in the worldwide futures contest with over 100% return per year, and that was a real money year-long contest. It's the same one way back when, I think 30 some years ago, Larry Williams turned 10,000 into over $1 million, and obviously I didn't do nearly as well as he did, but it's the same contest. So that gives you an idea of the caliber of traders you're up against. There's some really good traders who trade that contest. And if you go through the TradeStation forum and the help forum, and you'll probably see a lot of my old posts. I don't post much anymore, but a lot of my old posts under Kevin K-Dog, you'll see it's kind of interesting because the early posts I'm asking a lot of questions, and then as time goes on I start answering more than I'm asking. So I was trying to give back to the community. And the little red dot on the map is in Cleveland, Ohio, on the shores of Lake Erie, and that's where I am, and that's where I live and trade out of. So about an hour by plane outside of Chicago, but Cleveland, Ohio. All right. So talking about algorithmic trading, I think a lot of people these days are kind of scared and think that they can't do it. You hear some headlines that a couple weeks ago that I found that quants are eating away at Wall Street's edge, and over 1,000 hedge funds shut down in the past year. And so you see those things and you kind of think, wow, how am I going to be able to survive if hedge funds are closing down, and all these headlines about Wall Street not having an edge anymore. And that's kind of what we're up against. But I think that kind of thing has been that way throughout time. It's always tough, and there's always going to be obstacles in the way of any kind of trading, really. The big question, and the answer is yes. The question: can retail traders survive? And I think you can. You don't have to be this high-frequency trading firm to make money in today's market. You can be a little retail trader and still survive. I'm not saying it's easy, but I'm saying it's possible. And we're going to talk about that. Okay, so first, let's just clear the air about what algo trading really is. What is algorithmic trading? Because you hear that, and it's really a big buzzword that you didn't hear 5 years ago or so. The book I wrote actually has algorithmic in the title, and I remember when the editor said, hey, that's the title we want to use, I thought it was a little strange because algorithmic wasn't really as big of a buzzword, but it's turned out to be pretty much what everybody talks about now. But a lot of people hear it and they run for the hills. Algo, oh my gosh, algorithmic, and they, people get scared because it sounds intimidating. It doesn't sound easy. It sounds like you have to be this rocket scientist, PhD, statistician guru to actually survive, because algorithmic trading, wow. But it doesn't have to be that way. And I think a lot of it comes about because people associate these algorithms with high frequency trading. And that's a big part of algo trading. It's just something I'd recommend that you stay away from as a retail trader. I mean, these are hedge funds that have co-located equipment right at the exchange, and they create strategies that they burn onto chips, so they're super fast, and They spend millions of dollars on infrastructure so they can get their orders in ahead of everybody else's, even a microsecond faster. And as a retail trader, you can't expect to compete with that. If you try coming up with some kind of scalping algorithm, you're probably the only thing that's going to get scalped is you. It is hard because you've got all these super high-speed people, firms that are in front of you. So my advice, if you're going to trade with algorithms, you stay away from those people. That's what I do. And yeah, they probably do take my money sometimes. They probably cost me a tick or two here or there. But if I'm not trading 100 times a day, they're not taking a lot of money from me. That's for sure. And when we talk about algos, algorithmic trading, it's really the same thing we've talked about for years. It used to be called mechanical trading, systematic trading, rule-based trading. There's all kinds of terms that have been used over time for it. And all it is just rules that tell you when to trade, right? If this happens, then buy. If this happens, sell or sell short. That's all an algorithm is. It just tells you the rules. And the nice thing about them is once you create these rules, you can automate it. And that's what I do with most of my strategies I run on TradeStation. They're all running automated. So all I have to do is just check them once in a while to make sure they're operating properly. So if you think about it, the person who's doing moving average crossovers and calculating them by hand, that's algorithmic trading, right? And it's kind of funny, that's how I started. That was in probably the early 90s or so. I remember having a sheet of paper with different columns for different moving average lengths, and I'd go in and record the moving averages and recalculate them. I wasn't even doing it on a computer. But you know what? That was an algorithm because that would give me buy signals, sell signals, and that's what I was following, or at least I was trying to follow. And then the other end of the spectrum, like I said, the hedge funds, the PhDs writing these complicated programs, they're doing algo trading too. So if you have your choice, you want to be more towards that first guy than the last people. You don't want to try to do this high speed stuff. So again, it's just rules to trade by. That's all it is. And when you put it in those terms, it's hopefully not as intimidating. And there's a lot of advantages to doing this. And if you haven't thought of doing it, think about some of these things. You can test it yourself. You don't have to rely on some guru, somebody who says, oh, this candlestick pattern is the best. I use it all the time. And, you ask for proof and, they kind of go silent. Well, you don't need to bother with that. You can test it. If you can program it, you can test it. You can see if there's an edge there or not. And I hate to tell you, but chances are there isn't, because most of the things out there, they're junk. There is no edge to it. It's hard to create a strategy. But then again, it makes sense, because if it was easy, everybody'd be doing it, right? But then you can create a strategy and you can create a whole bunch of them. And they can be all the same market. They can be different markets, however you want. And you can be diversified. So I do both. I have probably at least half a dozen mini S&P systems. But I also have a lot of systems over most of the major futures markets. So I have a heating oil system and a corn system and a wheat system and a euro system. You put them together and you get a lot of diversification. And the other nice thing about doing all this is you test it, and then you'll know it performed well historically. Now, remember, I just said before, past performance is not indicative of future results. So it doesn't mean just because you tested it and it looks good doesn't mean it's going to continue. But if I have my choice between a strategy that I know performed well in the past and one that either I don't know its history or one that performed terribly in the past, which one am I going to pick? Well, I'm going to pick the one that performed well, right? Because I'm going to expect it to continue. No guarantee of it, though. But the last big advantage of this is you don't have to be glued to a screen. I mean, I know people who are staring at a screen for 8-10 hours a day and don't even get up to go to the bathroom because they're afraid they'll miss something with their next 5-minute bar or something. And if they can make money at it and be successful, more power to them. But most of the ones I know are struggling. They're like, oh, if I just adjust my stop a little bit, I'll be able to make it. And if I just make a little tweak to my price action entries, I'll be able to make a lot of money. And they're always one step away. I call it almost trading, where I'm almost profitable. I almost have this figured out, and they keep chasing it. You're chasing it almost all the time. Don't have to do that here, which is really cool. Of course, there are disadvantages. So, I don't want to make you think algorithmic trading is just advantages, because there's some big disadvantages. It's really easy to develop a strategy the wrong way. A lot of people think it's, hey, the better backtest I create, the better it's going to be, and that's wrong. The second point, past performance is no guarantee of future results. That's huge, and you got to be prepared for that. You got to be prepared for a strategy that looked great up until yesterday, falling apart today, because that does happen. And some of the other things, people override strategies. They can't resist changing them. I could tell you story after story of people I know who've been working on the same system for years and just keep changing it. Oh, I got to filter out Monday trades, or because the last 3 Mondays I've lost money, so therefore I'm just going to eliminate Mondays and do things like that. And then, of course, a lot of people are mistaken. They think that, hey, I create a strategy, I turn it on Sunday night, and then come back Friday and count my riches. And there's people out there who sell stuff who kind of claim that, which is just ridiculous. There is no automated trading that is unattended. If you spend time in the TradeStation forums, the people from TradeStation always say, automated trading is not unattended trading, and that's absolutely true. And people think they can walk away for days from an automated strategy, and you can't. You still have to keep an eye on it. You have to do things like do rollovers, and if there's outages and data corrections and all sorts of stuff. But that's just part of it. That's just part of doing this algorithmic trading, and it doesn't mean it's the end of the world. It's just something you have to deal with it. Okay, so let's get to the meat of things. Hopefully now you kind of understand where I'm coming from when I talk about algos. And so the big question is, in 2017, can you survive? And my answer is yes, but there's certain things you have to account for. So here's some things that I think will help you in algorithmic trading today. The first thing is not to live in the past. excuse me. There's a couple methods right there.
Her new memoir.
Well, a picture of a turtle, but everybody's heard of the turtle method. These methods, and there's a lot of them, used to work great. They might still work today. They might not work as well, though, right? So don't expect something that you know about that's been known out in the public for 30 years, 20 years to still work as well today. Why? Well, a lot of other people have seen it too, and everybody tries it. You know, I don't know many traders out there who have not tried some kind of variant of the turtle trading method to see if it would work, right? Because it's something you see and you know and it's popular, so you're going to try it. And the fact is, it might work, but it's not going to be as good as it used to be. Might be a good starting point to go off and do some other stuff, but don't expect what used to work exactly the same today. That's the first key to surviving. The second one is kind of related. Don't rely on public information. And what do I mean by that? Well, you know, there's obviously all these magazines and books and internet sites and stuff, and people will post code and do all sorts of stuff. And there's all these eyeballs in the background looking at this and testing these things and evaluating them, right? Well, a lot of people don't even go that far. They just see something in a book or a magazine and they immediately take it and run with it. And they say, well, hey, I'm just going to start trading with it because if it wasn't in a magazine, it wouldn't be any good, right? Well, the fact is it might have been good. You know, it might have also been somebody created something incorrectly. Who knows? But let's say it was good. Doesn't mean it'll still be good because now it's out there in the public, right? And if it's out there in the public, a lot of people are going to do it, and maybe it works for everybody, and then somebody will have the idea, hey, I'm going to get in front of all those orders that are trading this new system. And then somebody jumps in front of them, and all of a sudden, they start taking that edge away. So, public info, don't trade it exactly, but it can be a great starting point. That's the neat thing. You can take these ideas and then go off and do your own thing. You can add to it, you can modify it, but you might not want to use it as is. So that's the second key to surviving. Third one, you got to realize who you're up against. And the competition's really extreme. You know, not only are you up against other retail traders who can do a lot of testing nowadays with PCs and all the great software out there. You know, think of all the testing you've done probably with TradeStation. There's tons of other people doing the same thing. And then there's all the professionals out there, the CTAs and the hedge funds, and they're doing the same thing too. And there's not an unlimited pool of money out there to be had. And so everybody's kind of fighting over those same dollars in trading. I'd like to think there's not as many really ignorant people out there. You know, years ago there were probably a lot more people who, you know, would look at the weather in springtime and, ooh, hey, the weather forecast says it's going to rain, so maybe I should sell soybeans. And you know, people would make decisions like that. Some people still do, but a lot of those people are gone because they lost money doing it. And so a lot of that dumb money is no longer around. So you got smarter and smarter people with better and better tools fighting over those dollars, and that makes it tough. So you got to realize who you're up against, and that you're up against people who, you know, want to take your money. You know, don't assume this is going to be easy. That's the big thing. Okay. Um, So you can look at all this technology as making it tougher, but it also makes things easier. Here's just an example of what I do with TradeStation. Uh, you're not going to be able to see the charts, but you get an idea. I have a strategy running in each one of these charts. So there's 21 strategies in one account, 15 in another, 16 in another, 9 in another, 3 in another one. So I have multiple accounts, a ton of strategies. I'm trading about 80 strategies. I couldn't have done this 10 years ago, but I can do it today. So realize the technology is kind of advanced, and yeah, it's increased competition, but it's also made it easier for people to do certain things, and trading multiple strategies is a big part of what I do. Okay, so that's three ways to make it in today's world with algorithmic trading. What's a fourth one? It's dedication. This is a big one, and it's funny. I have a quiz on my website that people answer, and one of the things that always gets low marks is the amount of dedication and hard work. People think this is going to be easy. Why do they think that? Well, it's pretty simple. Anybody with $5,000 or so can open a trading account, pretty much. So the barriers to entry are pretty low. And so people think, well, then, therefore, it might be easy to trade. Well, think about if you wanted to become a doctor. The barriers to becoming a doctor are really high, right? You got to do all this school and internships, and it costs a ton of money. So people realize it's tough. Trading, though, hey, you can open an online account, and there's some brokers out there that require $100 to open a trading account. They make it so easy, and that actually hurts people, I believe, because to really succeed in today's day and age, you need dedication. You've got to love trading. You got to love the whole idea of trading. You got to love developing trading strategies. I mentioned that I've been trading for like 25 years or so, and the last 9 has been full time. So that first 16 years or roughly or so was part time. That was my hobby. My hobby was trading, developing trading systems, playing around with the market, doing all sorts of programming even before I had TradeStation. And I loved doing it. It was my hobby. And I always wanted to do it full time. But it was hard. And so my point is, if you don't love doing it, you're not going to succeed, because it's really that way with anything, right? If you're not willing to really be dedicated to it, you're not going to be an expert. Think about athletes. They are dedicated. They are willing to work on their craft. I heard about one basketball player who every day after practice doesn't leave the gym until he shoots like 100 3-pointers. Like, oh my gosh, that's some dedication. Probably 999 out of 1,000 people won't do that. Well, guess what? They probably won't have the success that this one person has. Same way with trading. You've got to love doing this. And it sounds all, touchy-feely, kind of, oh, you got to love it. Tell you what, you do, because if you're developing trading strategies, most of what you do is going to be garbage. I always liken it to Edison with the light bulb. And they said it took Edison 10,000 ways, and he always looked at it as, well, hey, I just found more ways that don't work. If he didn't have that dedication, he would have never figured out how to make a light bulb, right? Same thing with trading. So You've really got to be dedicated to it, and you've got to constantly improve. You know, I mentioned the stuff that worked 10, 20 years ago doesn't work as well today. You can't rest on what you used to do. You know, my trading, for example, is pretty much totally different than it was 10 years ago because it keeps evolving. And I'd look back at things I was doing even 2 years ago, and I'm like, wow, how was I doing that? I don't want to do that anymore. You keep evolving. You keep getting better. It's called continuous improvement. And you must do it. So this, beyond anything I've just said, this is probably the toughest one. And it's also maybe the most important. You've got to be dedicated to doing this. You can't expect to spend 1 hour a week working on strategies and come up with something. And if you do, you're probably doing something wrong, in my opinion. But ultimately, the market might tell you that, right? The market figures out if you kind of cut corners. It's amazing. Okay, so I've kind of alluded to this before. You know, don't be this guy trying to be a retail scalper, because right behind you is this high-frequency shark. If you try to do what the high-frequency firms are doing, I can pretty much guarantee you're going to lose, because you're just not as well equipped as they are. You're not as strong. You're not as well capitalized. It's going to be tough. I can tell you, I know a lot of traders out there, and I don't know anybody who's running on a retail level who's running high-speed algorithms with scalping and doing well. Now, maybe it's just because those are the people I know, and maybe the people who are doing it aren't talking. That could be, but I tend to think that scalping isn't working and isn't something you want to do. In case you're saying, oh, Kevin's is full of it, well, just look at this example. Let's just say you had something where you traded 10 times a day and you have a tick slippage in total cost. Just, you know, and that's probably underestimating it. But that means you have to get $125 a day just to break even if you're trading one ES contract, right? So you've got to overcome that every day. You know, you're in the hole every day until you hit that. Where if you're swing trading, which is what I do a lot, maybe I'm only trading one time a week. That's only $12.50. That's, you know, so if a high frequency firm takes that from me every week per contract, I can deal with that. But trying to overcome $125 a day by doing 10 trades, I don't know if I can do that. So that's why I stay away from it. Okay, so one more point. Simple works. People think you have to be really super complicated. No, you don't have to. Here's an example. This is actually a Japanese yen strategy. The light green is since I've been trading it live. Now, you know, you might look at this and say, well, wow, look at this flat period. You know, the system was broken. No, I don't look at it like that. I look at it as, hey, I'm trading this with a whole bunch of other strategies, and I can pretty much guarantee you when this strategy was flat, other strategies were performing well. Maybe it was a completely different market. Maybe it was a different Japanese yen strategy. But the point is, over time, this one, since 2012, has done pretty well. It keeps doing what it had been doing in the back test, in the walk forward back test. And if you take a look at the code, I covered up some of the code, but it's not a terribly complicated thing. It looks like a little candlestick type pattern. And if it's met, you buy. If it's not, you sell. And then it looks like I'm exiting at a certain loss point or a certain number of bars after I enter. That's all it is. Now, obviously, there's more because I'm doing walk forward, and the parameters might change over time for the stop loss amount and that kind of thing. But the cool thing is that's pretty simple, and it's worked for going on 5 years now. So simple does work. A lot of people think you need real complicated things, and I'm here to tell you that the real complicated things will get you a better looking back test. It certainly won't look like this. It'll be more of a straight line, which most people want, but it doesn't mean it's going to work going forward. And that's the real key. The simple systems, yeah, they have bigger drawdowns and back tests, but they tend to work moving forward better because you're not trying to impose so many things on the market in the future. So simple definitely works, and that's something to keep in mind. And then what? So, these simple strategies aren't that great. And here's a whole bunch of them. And you can see there's ones with big drawdowns, and these are all individual strategies. But you put them together, and you get something like that. Which, hey, that looks pretty smooth, huh? I mean, obviously, relatively speaking, there's still drawdowns there, but when you add up these strategies, your performance can really increase. And the reason is you're adding strategies where the profits will add. Strategy A plus strategy B, you trade them both, and you're going to get the sum of those profits. But the drawdowns aren't additive. They happen at different times. So just going back real quick, see like this gold system way up at the top, the gold color. It's going down right here. It's in a pretty nice drawdown. But hey, if you trade it with this green guy, look at the green guy was going up. So the net, I don't show the net here, but the net of those two would be a lot smoother. It still might be a loss, but be a lot better. You might not be able to see the pointer. Let me, thank you for pointing that out. So look right here. So this one going down, but this green one going up. And they kind of balance each other out, which is really cool. And that's why diversification works. Or I should say that is diversification. And that's why you want to have a whole bunch of strategies. You want to balance that out. Then you're not looking for one strategy, that's this perfectly straight line. You don't need that. You can add in some imperfect strategies and add them together, and it turns out pretty good. Okay, so my conclusion in 2017, where we are right now, simple works. And if you use the trading platform to build strategies, you just build multiple ones. You just keep developing new strategies. That's what I do. You trade them together, and then as ones break, you take them out and replace them with new ones. And that tends to work pretty well. And that kind of wraps up what I wanted to talk about. Algorithmic trading can definitely work for the retail trader in 2017, but you can't live in the past. You got to find your own way. You can use public info, but eventually you want to make things your own. You got to realize the competition that's out there. You got to be dedicated, absolutely. Stay away from high frequency techniques and keep it simple. And it's really as simple yet it's difficult as that. So If you get a chance, you want to learn more about what I do, visit my website, kjtradingsystems.com. I have tons of videos that you can watch. I mentioned a quiz that you can see if algorithmic trading is right for you. Do you have the right skills and temperament? It's really easy. I also have a big toolkit with a lot of articles and code things and all sorts of stuff that I give away there. And you can read about my book, and you can also read about my workshop that was just voted 2016 Trading Course of the Year. If you're really serious about developing strategies, that might be something you want to look at. And with that, if you have questions, type them in. I'm going to go through and answer them for probably 10, 15 minutes or so, and then last 5 minutes we'll do this book giveaway, and we'll try to end right at 30 minutes past. So I'll just start going through these, and if I miss your question, feel free to email me. There's my email address right there. I have never not answered somebody who's asked me a question after one of these things. So, you know, it might take me a couple days, but feel free to ask. So Bart and actually Stefano are both asking the same question about volume analysis. Do I use it at all? And I use it in some strategies. I will have some volume filters where I say, hey, if the volume is above the average of the last 10 days or whatever, or last 10 bars, then you can make a trade. So I'm looking sometimes for high volume. Other times I look for low volume, where maybe it's kind of a tight range market, and I'm looking where, hey, no one's even trading because they're, you know, everybody's kind of losing focus and looking at a different market. So I do incorporate it. I don't always use it. I don't use it in any kind of volume weighted prices or anything like that. So I don't do that kind of thing, but I will use just straight out volume. And I'm not sure if I use open interest or not in any current strategies, but I have used it before. So, and Guy's mentioning that my trading's more technical. I will look at just about any kind of rule that you can program. So it could be an indicator, it could be a candlestick pattern, it could be just simple momentum. Anything you can program, I look at, and I try not to say, oh, hey, I must have an indicator or I must avoid indicators, that kind of thing. Anything that works and tests good, I'll use. Okay, let's see. We're just looking for some other ones. Yeah, as Robert mentions, it's quality assurance terms: plan, do, check, and act for continuous improvement. It's absolutely true. I used to run quality assurance for an aerospace company, a mid-sized aerospace company, where the product we made, if it stopped working, the engine would stop, which isn't a good thing. So, you know, quality was always high priority. And I look at trading as the same way. You know, if you're sloppy with the way you do things in trading and your development work, the market will figure it out and it will penalize you for it. Okay, and then people are asking about the recording, and Don has put a link to where the recording is. And Kay has a good question. Do you discontinue strategies when you know major news is coming, like U.S. election night? No, and sometimes it costs me money and sometimes it doesn't. So I'll give you an example. The Brexit thing last year, everybody knew it was coming. I left all my strategies on, and I absolutely got hammered the day after, or you know, that evening of Brexit. But by the end of that week, I had made all that money back plus some, so it was a temporary thing. Same with the U.S. elections. I traded all through it. My philosophy is you trade what you test. Okay? So let's say you created a system and you put rules in to not trade around U.S. elections. Okay? You know they're coming every 4 years, or if you wanted to do every 2 years, you can do that and just say, hey, turn off my systems, exit all positions 2 days before, 2 days after, however you want to do it. And that's the way you test it, and it works. Then going forward, you do the same thing. What I personally have a problem with is testing it with you trading those days and then deciding, tonight, I'm not going to trade tomorrow because there's a special meeting or something or an election or whatever. I think that's, now you're violating your back test, right? You're doing something different than what your back test did. And when you start going down that road, then you come up with all sorts of excuses of, oh yeah, I'm not going to trade today because the U.S., what if they attack Syria again? And so I'm just going to turn everything off. Well, part of trading is you trade through this uncertainty, and you never know what's going to happen. And in those times, I rely on my back test. I say, well, I always traded, so I'm going to continue trading. So that's kind of the way I look at it. Okay, Luke is asking, how often do I update the contracts on my 80 charts? Well, I have it set up so I'm always trading the front month continuous contract, and then it depends on the market. So obviously, like energies, you have to roll them every month. You have to update the charts. Some of them, ES currencies, those kind of things, you have to update every quarter, and that's just some part of the maintenance activity. You got to continuously look at where there's a disconnect, where you're not trading the front month, or it's getting close to rollover time, and you just got to do it. Carl's asking what my favorite time frame is. I will trade any time frame in any bar size. So, I will do 5-minute intraday systems if I can successfully develop a system to it. I'll also do daily bar systems that last for a week or 2 weeks if they're profitable long term. So I kind of look at everything. I think it's easiest the longer you go with bar sizes, the easier it gets. So daily bars tend to be the ones I develop a lot of systems for. Ronald saying very little useful or applied information or examples of how to. Yeah, well, sorry about that, Ronald. Why do I need multiple accounts? Far as asking that question. And the big reason is because it gets a little tricky if you have 2 ES systems to trade them both in the same account. If you go to my website or send me an email, I have a 3-part series of articles that I did for systemtradersuccess.com where I talk about some of the problems with that. What ends up happening is you get some interfering signals, and sometimes TradeStation can get confused. And there's cases where you can do it and it works, but there's a lot of cases where it just gets all messed up and it's hard to do the bookkeeping for it. So that's why I trade with multiple accounts. And Jimmy's asking, why do I only trade futures? It's really, there's a couple reasons. One is the leverage that you get with futures, which is better than stocks. Two, if we have a stock market crash, all stocks will become more or less correlated, and they're all going to go down. So, but if the stock market crashes, doesn't mean coffee and gold are going down, right? I mean, they might be doing something off on their own, might be completely unrelated. So you get a little more diversification. And then for the U.S. people, the tax treatment for futures is real easy. It's basically one number you plug into a form. You don't have to keep lists of all your trades like you do with stocks. So those are some of the benefits. Anish is asking, what is best to learn programming for algo trading? Well, I'm obviously kind of biased because I use TradeStation, and I think it's a pretty easy. It's called easy language for a reason. It's the thing have been told is it was written by traders for traders, where some of the newer platforms that have come out in the last 5 or 10 years are written for programmers by programmers. And that's a big difference. If you're more interested in programming, you know, you go one route. But if you're more interested in trading and just quickly developing trading strategies, I think easy language is great. Okay, we have more questions. We have a couple more minutes for questions, so I'll just try to whip through these. Renee's asking the max number of strategies I've traded on a single account, probably about 25 or so. What type of money management, Josh was asking. I usually use like some fixed fractional, but I do some unique things because I'm trying to maximize return within a given portfolio, so I do some kind of different things. Far's asking about the problem of no fills. What I usually do is trade with market orders, and I don't bother with limit orders because sometimes you get partial fills and that kind of thing. Market orders, you know, as long as the market's trading, you'll get filled. Do you trade during news? Yes, David's asking, or can you exclude news? If it's a weekly report, you could. You know, you could say, hey, the weekly energy report, I'm not going to trade, and here's historically all the times and dates of that report. Just program that into your strategy. It would take a while, but you could exclude all those dates. Prejat, hopefully I pronounced your name right. Doesn't programming your strategy on TradeStation put it in the public eye and thereby decrease its effectiveness? No, because it stays on my computer, but could theoretically somebody steal it? Yes. And I don't think I have any strategies that are so great that if somebody stole them, it would mean the end of them. I give away strategies on my website that I still trade, and they're still effective. You know, just because they're out there doesn't mean that people won't. A lot of people won't even use them. How do you avoid data mining bias? That's kind of, Mikhail's asking that question. That's kind of a tough one just because there's a lot of things I do that I really, you know, we just don't have time to get into to prevent that. But it's hard because it's really easy just to load up all your data and analyze it and then, oh, hey, it looks like Monday and Tuesdays are the days to trade, and then you develop your system. So you got to be real careful. Yeah, so David's asking about time frame. I usually use daily. Antonis is asking about coding language at TradeStation. I think Don gave a link to that. Bart's asking, do I use options activity to augment my algos? The answer is no, and there's a couple reasons. One of them is just once you start getting into options, it's really hard to test that with historical data, you know, because you're looking at expirations and different strike prices, and you know, a lot of options, especially in futures, are kind of thin. So even if you went off the settlement prices, doesn't mean you can even get executed there. So you might have a lot more slippage than you expect. So I usually don't. I do use options on a couple strategies, but it's pretty specific what I do. Normally I do not. James is asking, when I trade multiple systems, do I trade the same risk? No, normally I don't. I will look at it from a portfolio level, and so I might decide, hey, I want to be trading 2 crude oil to every 1 gold or that kind of thing. So I do a lot of analysis like that. How do you handle conflicting strategies, signals of different strategies? That's a good one because what ends up happening sometimes, I'm long in one account and short in another account in different systems, which is kind of annoying because I'm paying commission on each and spread costs on each, and I'm using margin on each, and yet I'm flat. There's some ways, and I talk about that in just email me. I'll send you those articles of some ways around that. Okay, people keep asking about time frame algos. Most of them are daily. Mark's asking, do I target particular instrument? I do both. Sometimes I'll go in with a particular market that I want to look at. Other times I'll just have a system and I'll try it on a bunch of different markets. Okay, there are a ton more questions than I'm gonna have time for, and I want to respect the 5:30 time. So if I didn't get to your question, I apologize. There's still probably about 10 good questions out there, but I'm just not going to have time to get to them. So feel free to email it to me, and I promise I will answer it. So don't think I'm kind of avoiding you. All right, so with that, I kind of want to jump ahead and do this book giveaway. This is courtesy of Wiley Finance. They're my publisher, and they're pretty much the premier publisher of trading books. My book is Building Winning Algorithmic Trading Systems. Came out a couple of years ago. Still performing, still selling pretty well. Tradingschools.org said it remains an indisputable classic. I don't know. That sounds pretty cool though. And it's won a couple of awards from Trader Planet. So what I'm going to do is I'm going to give, I'm going to give a question, and I'm going to take the third correct answer. So just type in your answer in the chat box. I will give you take the third correct answer. Okay, as retail traders, what should we avoid? Okay, you can stop answering. Neil L, send me an email. You have won an autographed copy of the book. And thanks everybody. Scalping's a good one too. High speed, that's the kind of answer I was looking for. All right, one more question, and this will be for the, okay, there's HFTs. This will be the the fifth correct answer. And this one's a shameless plug for my sponsors at TradeStation. What's a great benefit of using TradeStation? 1, 2, 3, 4, 5. Looks like Vincent M. You got a correct answer. And, what are some of those correct answers? There's a whole bunch of stuff, and that's kind of what Vincent said. There's backtesting, there's automation, there's diversification from trading multiple strategies. You can do so much with it. It's a really powerful tool. And I'm not saying obviously it's not the only trading software tool out there, but I've been using it a long time. And it's kind of funny because I was talking to somebody a while back, and they were like, oh, TradeStation's it's a dinosaur program. It's, the only people you hear using it have been using it for 10 years. And I kind of turned that around. I said, well, doesn't that tell you something, that people have been using it that long must mean they're having success with it? Some of these new platforms, people come and go every week, but there's a lot of people who've been using TradeStation a long time, and that means something. So again, thanks to the winners. Just send me an email and tell me you won. Vincent and I think it was Neil. And like I said, if I didn't answer your question, feel free just to send me an email. It's kdavey@kjtradingsystems.com. I will type it out. And with that, I will turn it back over to Don. I want to thank everybody for having me here today.